Right, so today we're going to learn about what psychological levels are, how to draw them, and also how to trade with them. All right, so basically a lot of people know what psychological levels are. They've heard of it, but in terms of trading it, they don't know how to do it properly. Okay, so you know this, anytime you want to buy something, that is an example. If you want to buy a car, normally you want to pay the price of the product you want to buy in the whole number. Let's say if it's $1,000, you want to pay in $1,000. You don't want to pay $1,000 1 cent. No, you want to debate price to a normal fixed rate. That is what we call psychological levels. Okay, they are run-up numbers, or they are just whole numbers that people want to buy or sell from. Okay, so you can see in the market, any place whereby there is actually a whole number, that is if it's 1,000, 2,000, 3,000, 1,500, price react to that zones. Those zones are what we call psychological levels. Okay, so those are the zones that price buyers and sellers normally want to debate price on. Okay, so let's say if you want to buy a phone which is 1,200, you want to debate the price to 1,200. You know, you don't want to pay a price for a product that is 1,200, 335 cents to something. No, you always want to debate the price to the normal fixed rate. Okay, so that is what we call psychological levels. So now let's go here and let's see how to fix the psychological levels, how to plot them on the chart, and how to trade them. Now you can see a lot of people trade the psychological level and it works best for them. You can see the example is right here. Okay, so now let's go to my screen right here and let's see how to draw psychological levels. Okay, so if you are a day trader, draw your psychological levels in the daily or the 4-hour time frame. Okay, so I'm going to go ahead and show you how to draw the psychological levels. All right, so you take your horizontal tool and you put it on the screen, tap on it, and then you change the value in it. I'm gonna make it 0. Okay, so this is it. We have 1.35000. Okay, so you're gonna be adding 50 50 50 to it. Okay, because those are the zones that price is likely to react to multiple times. So I'm adding 50 to it, making 500. Okay, I'm adding another 50 to it, making 1.3600. Adding another 50 to it, making 1.3600. 500. Alright, so now let's plot some below here. So I'll just speed the video, plot it, and then come back later. Alright guys, so we have the psychological levels plotted, and let's deal with this one. Okay, so now everything is plotted right here. How do you trade the psychological levels? You can see anywhere that price actually reacts to the psychological level, you can see the reaction of price. Look at this place, how price reacted before the push. Okay, so anywhere price reacts to the psychological level, there is a push either to the upside or to the downside. You can see price was rising from here, price came to the top here, react to the psychological level. Price came here, react to the psychological level right here, a drop. Another reaction right here, a drop. Okay, so you have to draw a psychological level in a bigger picture, that is in a bigger time frame, either the daily or the 4-hour, and then you scale down to the smaller time frame, and then you take your trade from there. Okay, so now we're in the 4-hour. Let's go to the 30 minutes and let's see how price is actually reacting in the psychological level. Alright, so now in the 30 minutes, you can see the reaction of price in the psychological level. Look at what happened right here. Price reacted to it, dropped to the downside. The same thing, reaction around here, a push to the upside. Okay, so you can see when you zoom in, you can see price did the reaction around here, drop, reaction, push. Okay, so anywhere price react to the psychological level, there's a reaction there. Price react to this place, drop, reaction, push. Okay, so now we can see that the psychological levels here is acting as support and resistance. So how do you trade this? You trade this with normally your price action or either your SMC. So how do you apply this principle? Now you can see what price is doing right here. Price is pushing to the upside. So you can draw your trend line around this place like this. That is a perfect trend line around this place. All right, so now let me go to the 1 hour to make the picture clear. All right, so now you can see this is the trend line, and look at the reaction of price around here. Price reacted around here, pushed to the upside. Another reaction around here, pushed to the upside. Anywhere there's a reaction around there, there's also a psychological level. Look at the reaction around here, push. Another reaction around here, push. Okay, reaction around here, push. All right, and you can see price break, retest, psychological level, now pushing to the next psychological level. All right, so anywhere price react to where there's either a trend line is another confirmation for a trade entry. Now you can take this sell right here. This is a clear confirmation for sell, and you can target the next psychological level as your TP. Put your stop loss just below here, and you can target the next psychological level or the third one as your TP. You can see, and price actually drop to that place. Now look at the same reaction that happened around here. Most people trade psychological level. You can see the same thing happen around here. Price consolidated in the zone. There's a psychological level in the place, and also a trend line. So you can take your buy from here, stop loss here, then you target this high here. That is this immediate high around this place. So guys, this is how to trade psychological levels. Trade them with price action or SMC. Anywhere price react to the psychological level, if you find your trend line in that region and the supporting price, you take yourself from there. The same thing happening here. Look at the reaction of price. Drop, and that drop, and that drop. So you can draw your trend line around here. Now you can see there was a third touch. We had this touch right here. Okay, we had this touch around here. We have the second touch, and we have the third touch around here, and that's also a psychological level of 1.35000. All right, you can take yourself from here, target the next psychological level. So if you are trading psychological levels, the difference, that is the distance between them, is 50-50. All right, so by following this principle, you can be getting 50 pips every day from the move or from the market. Target the next psychological level. Now you can see it will be a successful trade. Okay, so trade with either your trend line or your patterns. Anywhere there's a trend line, psychological level, break and retest, you take your trade. Now you can see the same scenario happening around this place. Can we join trend line around here? Yes, we have another a push from here, a push, another push. Okay, so we can join this trend line right here. Let's join this like this. Now you see you have a push from here, a push, and another push around this place. Okay, so you can take your trade from here. That is confirmation from here, a buy, because there's a psychological level there. Take a buy. Stop loss will be the psychological level, and target the next high. Okay, so that is how to trade with psychological levels. Okay, trade it with trend lines, price action, either SMC, anything you want to do with it, trade it with it, and it works perfect. Okay, so subscribe to the channel, and guys, I'll see you in my next video.